And we are live. What's up, guys? Welcome to the Fresh Air Podcast, man. It is Money Monday, and we're here with Steve. We're going to talk about taxes. Let's get into it.
Let's go.
And we are live. What's up, guys? Welcome to the Fresh Air Podcast, man. It is Money Monday. We're here with Steve, our accountant, man. We're going to give you guys a lot of sauce today. Sorry for the delay, guys. As you guys know, some crazy news just hit. They did 3 simultaneous search warrants at Diddy's residences. Yeah. One in Miami, one in Los Angeles, and one in New York City. So I was with the academics. We had like almost 40,000 people watching. And I was explaining, it was actually my old agency that I used to work for, HSI. I was explaining how search warrants work, my predictions, etc. So make sure to definitely go check that out on the playback. He'll have that up. But sorry for that delay, guys, because obviously this is like breaking news and shit. So
Yo, Steve, did he pay his taxes, man?
I don't know. We're gonna find out.
Yeah, they're definitely gonna find out.
He's going through it, man.
Yeah. So holy man, that's not a good thing when you're getting 3 of your places rated at the same time in 3 different jurisdictions. So yeah. But yeah, guys.
Money Monday.
Yeah, it's Money Monday, man. We're here with Steve. Obviously, as you guys know, it's tax season. So we figured, why not bring our accountant in and we could talk about what you guys need to have in play before the deadline. And, Steve has a bunch of things that he has outlined. But Steve, real quick, for the people that might not know who you are, can you introduce yourself to all the new viewers?
Sure. So I'm Steve from accounting. These are my clients here. And, I've been doing at least for 3 or 4 years now.
Yeah.
I guess.
Yeah, it's been a while, man.
So right when you
Almost
guys started
4
the
years.
show. Yeah. So it's great to be back. I'm a CPA. I've got about 30 years experience. I got 2 practices on the west coast of Florida, one in Bradenton and one in Sarasota. I've been doing this for a long time. And I've owned several different businesses, invested in real estate. And I deal with a whole slew of different industries in my practice, as well as high net worth individuals, and putting together some complicated tax strategies for them.
And also one of the only guys I know that does crypto taxes.
Yes, one of the very few. I know that's one of the areas where a lot of the old timers are not, paying attention to it. They would call them like traditional finance guys. So, as soon as it came out and I started taking courses in crypto, I said, okay, this is obviously the future of finance. And, the quicker I learned about it and the more I learned about it, the more, valuable I will be and be relevant in the future. So we'll talk a little bit about that stuff too, as far as, and I'm sure a lot of you guys have a young audience here that probably a high percentage of them are involved with crypto in some way.
Yeah.
And they need to basically either report their transactions on their tax return. And
what percentage of accountants would you say are like versed in crypto?
Less than 10%, maybe like 5% at the most.
Wow.
I mean, yeah.
Okay.
And it's really there's a lot of like, and this is what I did. I wrote a book. Because when I first started taking crypto courses with Charlie and Miguel, I took their course, and then now I teach in their course too now. So I've done several courses, and I did the tax portion of that for them. So I wrote a book because one of my things was when I went in there, it was so advanced, and they were talking so far advanced that it took me a while to catch up. So what I did was I said, okay, if I were to do this again, what would have been useful to me? So I have a book. It's like a 101 crypto. It just gives you the basics
From a tax perspective.
From a tax perspective, but not only that, just learning the language of crypto and getting in and onboarding and understanding like the fundamentals of it. So then you have that base knowledge, and then from there you can learn how to set up, get on a DEX, onboard, get from fiat to an exchange, buy crypto, open up wallets, security keys, things of that nature. So it takes it to that next level, and then learning what cryptos are good to invest in, and basically looking at a project and not just like right now we're in it's like the meme coin season right now. So they have this blockchain called Solana. You may or may not be aware of it, but everybody's like coming up with like the, like Hunter Biden's laptop as a meme coin. It's like it has no use at all, but people go in and then, these like, they call them rug pulls basically. So it's like you try to get a sniper bot to get in on a position, carry that up to like, stay in it for like 15 minutes, look at it, and then try to cash out, make, try to double your money. It's almost like gambling, basically, in my opinion. It's fun, you have some fun, some money, and some, there's one kid in my building, which I'm gonna be doing some stuff with. He's made enough money to buy 2 cars for the past few months, and he's just learned about crypto. Probably he's a really smart kid, like 19 years old. So
you're one of the few accounts that basically like you learned crypto first. Yeah. Once you understood it, you're like, okay, now I know how to apply this from a tax lens, and how to properly deal with this, because I think it's very important the audience understand that, like, knows that not only do you understand crypto, but most importantly, you know how to deal with it from a tax perspective, because obviously it's an asset class that is, I guess, far different than real estate or having a business, or, I mean, you tell me.
So the IRS treats it as property. So basically, so for the most part, your gains in crypto are going to be taxed as capital gains. Okay. Unless you're a miner. And if you're a miner and you're mining, like, let's say Bitcoin, or you're mining some other like blockchain, like Pulse chain or something like that, where you're setting up validator nodes, and you're getting paid in rewards of that token of that basically it's called the layer 1 token. So that's set up as a business. So that's taxed differently. That's taxed as ordinary income, which is higher. So as you know, but a lot of the crypto stuff is going to be short term gain. So it's going to be taxed more like a ordinary income, because it's taxed higher. But most of the other, less transactions are going to be held for 1 year or more in crypto, because the market's so volatile. Yeah. So people come in, they trade quick, and they're doing like swapping coins. And so the biggest mistake I see in crypto, and the biggest misunderstanding, is not understanding what's taxable, like a taxable event in crypto. So basically you get your money, you take it from Bank of America, you go into Coinbase, you open up an account. You typically, most people, get like US dollar coin, which is a stable coin. Yeah. It's pegged to the US dollar. They'll get that, and then they'll flip it for Ethereum, get a Metamask wallet, and then you need Ethereum to transact, because you have to pay transaction fees on the Ethereum networks. That's called gas. Yeah. Then they start flipping that for coins. Anytime you make a swap is a taxable event. Really? Yeah. Wow. So even though you're doing it on the app and you haven't cashed out yet, but when you swap, that's a taxable event. Yeah. So if you buy Ethereum and then you're like, okay, and Ethereum, let's say, goes up, and you go, I'm going to put this in like US dollar coin in USD, that's a taxable event, because it's like a stock trade. Does the interface do it for you? Like, let's say you do this on a Coinbase or something. Do they do that for you? It does, yeah. So there's software program, but we'll get into that. We'll get into it. So I kind of wanted to start with like maybe just the basic stuff, for like, hey, I got to file my taxes. When are they due? I don't have my stuff ready. Like we'll talk about extensions. So we'll go there, and then we'll go to the cryptos. You guys can see, obviously, as well. Because I didn't even know that counts as a taxable event. That might save some people some headaches in the future. Yeah. And so I get a ton of people talking to me like, well, I haven't taken any money out. I didn't offboard any money yet. And I got to offboard. Like, I had a guy that he's like making like millions in crypto. And then they have this perception that just pulling your money off to use it to purchase like hard assets, like maybe real estate or something like that, or a vehicle. Then that's when it becomes that's taxable. What I thought. No. Wow. No. It's all, you have to calculate all that on the blockchain. You might have just saved some people from going to jail. Literally, you might have just saved some people from going to jail now. Yeah, so that's like the biggest thing. Like, I didn't pull any money out yet, so it's all in there. Well, but you still have transactions where there's gains and maybe losses. Last year, 2023, probably more. We were probably going to see more losses on these returns. Yep. And then we'll talk a little bit about that. Hopefully, some people employed some strategies. Is that my phone?
I don't know what that is.
Okay. Sorry. Continue.
Yeah. So we'll get into the basics, I guess, for taxes first, and get it more into crypto. Yeah. So I mean, right here we are, right? A major deadline just passed for you guys, because you guys have S corporations, right? Yeah. So, and I put you guys on extension. You didn't even know it. I automatically put you guys on extension. Steve, man.
Yeah. So March 15th passed, and we had to file for the S corporations, right? That was the deadline. So I put you guys on extension. I filed a form. It's called 7004. So for anybody listening out there, hopefully you did that. If you didn't, and now you go and file your S-Corp return, you're going to get hit with a penalty from the IRS. So I'll talk up, there's a little trick that you can do to get rid of that. But so March 15th was for partnerships and for S-Corps. April 15th is for personals. Yeah. 1040s, you call them. And then for C corporations. I don't have very many C corporations, maybe like 2. Yeah, so, and then what you can do is you can file for an extension, an automatic extension for time to file. So here's another mistake people make. It's an extension of time to file, not to pay. So what do you have to do? You have to estimate come April 15th what you think you're going to owe in taxes, right? So there's a way, it's called the safe harbor rule. So the way to do that, if you're good and you can, calculate within 90% of what you would owe when you go to file. So let's say, I owe, you wind up owing 100,000, but then you go and you make an estimate on April 15th and you pay that estimate and you go on extension. When you go to file, if you owe like if you pay 90,000 when you do your extension and you go find out that you owe 100,000, then you're within that 90%, right? So the easy way I do it is I take your prior year total tax, and another way is you could do 110% of that.
To be safe.
Yeah. So if it was, you owed 100,000, 2022, let's pay 110 in. Yeah. And then that's a safe harbor. So if you owe 200, you're not going to get penalized for failure to pay. Because there's different penalties in the IRS.
Let's say, man, Steve, I go to work, bro. I got kids, got stuff going on. I don't want to stress about this at all.
Right.
Who should I go to? You, TurboTax? Who should I go to for this?
So, I mean, if you got a lot of stuff going on and you don't have no interest in doing your own taxes, obviously, if you got too much going on, then you want to hire somebody. It's well worth your time to hire somebody that you can trust, that can, obviously keep you out of trouble. And
I noticed when I switched from, when I was working for the government, it was easy, right? You can go to an H&R Block, standard, you know what I mean? Right. You got one income, it is what it is, you got a regular job, cool, easy. But once you become an entrepreneur, you need to invest in an accountant.
Yeah, so once you have a rental property or you're doing a side hustle, and then you have a W-2 on top of that, then you probably want somebody doing your taxes. Yeah. Who the hell wants to, every year, you got to be apprised of all the new changes in the tax law. You got to go get the software. You got to figure out and hope you're doing everything correctly. And,
Because the laws change.
Yeah,
and there's a bunch of things that Trump put in that Biden kind of slowly got rid of. I remember you used to be able to write off 100% of your meals for business. Right. And you used to get big tax deductions for vehicles. You don't get that stuff anymore now with Biden in.
Yeah. Right.
And little nuances like this, guys, most people are not going to know this stuff.
Right.
I would be worried just to even try it myself nowadays. You never know.
Hell yeah.
Yeah. And most people wind up overpaying their taxes. The vast majority of people that try to do their own taxes wind up overpaying. They don't take advantage of the full tax code.
Especially when you're an entrepreneur.
Yeah, exactly.
So sorry. So we talked about the deadlines. What else did you want
to? Like I said, I put you guys on extension for March 15th.
Nice.
Your subchapter S corporation. Both of you guys have your own corporations.
W. Steve.
So basically, if I didn't do that or you didn't do that, you would get there's a $220 per month penalty from the IRS if you didn't do that, right?
Wow.
So a lot of people don't realize that. So and they're like, oh, file an extension.
And you got like $2,500 because you didn't want to pay it for a year or some shit.
Yeah. So the next year they go to file, and all of a sudden they get a letter from the IRS saying they owe like $2,500 or $3,500, something like that. It's a steep penalty.
Yeah.
So there's a way. If you get these penalties, a lot of people think, oh man, I got penalized. They just kind of throw their hands up in the air and they deal with it, they pay it, right? You don't have to. So if you have a clean record that you didn't have any penalties for the previous 3 years, and you're on time with your file, you're up to date, you filed your last 3 years taxes, you don't owe anything. What you can do is it's called a first time abatement waiver. So we call it the FTA waiver. Not a lot of CPAs know this. So I started employing this 15 years ago. In my practice, I came across an article.
So you've done hundreds of these things?
Yes.
Okay.
Yeah, a lot of people are like, I'm like, no, don't pay that, because, and then the problem is some people wind up paying it, and then they didn't have to, and it's harder to get the money back. So I'm like, no, don't pay it. Get penalized. When you get the penalty, give it to me.
Yeah.
And I have a template where I write a letter and then we just send it in. If you're a 1040 filer and you got penalties on your personal tax return, then get the penalty notice on the top there, the upper right-hand corner. There is going to be a phone number. Just get on the phone number and call them and say, hey, I want to do the FTA waiver. and then they'll look up your account, and they're like, okay, you qualify, and they could abate it right on the phone for you.
Oh, nice.
In most cases. So that's a little free sauce for your guys there.
Yeah, I mean, you've already given
hundreds of thousands of dollars, right
bro.
there, yeah.
We've been going for just a few minutes here, and you've already given them a bunch of value as far as like, oh yeah, like that counts as a taxable event with crypto as far as like swapping coins out. And then right now with people, because there's probably people watching right now that might got one of these penalties, and they don't know that they can actually, if they have everything else standing like
just call that phone number. It's an 800 number on there. Call that phone number where it's right on the penalty notice. And you can get it waived with, I mean, you might be on hold this time of year, but just, start doing some other stuff when you're on hold.
Yeah.
Also, chat, just so y'all know, we are going to have a Q&A because I know when we have Steve on, you guys love to ask questions. So we will have a Q&A at the end. I know Steve just had some things you want to talk to y'all about, and then we're going to open it up for Q&A. So if you guys got questions, fnfsuperchat.com, or go ahead and send a Rumble rant in, and we'll answer your questions because some of you guys asked some really good questions.
And guys, also just to add in as well, we have our own Telegram chat for announcements and events for Fresh and Fit only because, as you know, when you get notified on YouTube or Rumble, sometimes you don't get all the time right away. So type in the Telegram chat. I think Mo has it in the chat as well. Yes. And join that. It's free, by the way.
So I'll turn it back to you, Steve. I know you had a list of things that you wanted to talk about.
Yeah, so I'm gonna dive in. So I think that's kind of what I want to cover, just the basic stuff that some people are going to overlook that I think is going to be valuable for your audience. But the other thing I wanted to get into was the crypto tax because that's the soup du jour today, right? It's the soup of the day. Everybody's really like the market's up and we're in a bear market now. We just came off of a terrible long period where we were in we're in a bull market.
Yeah. We're in a bear last year though.
We were in a bear market for quite a while. So I'm sure a lot of the returns that people are doing right now and calculating their crypto transactions are going to come out to have losses. So I don't know if a lot of people knew this, but this is another piece of really good valuable information and it's different when you're involved with a traditional finance stock market and you're trading stocks and you have stocks that are at a loss. A lot of people, what they were doing, like it's at the end of the year, like around close to December 31st, they were selling that stock for a loss, and then they would buy it back in the following year, thinking that it might go up again. And that's called like loss harvesting. So the IRS put a stop to that and said, no, you can't do that. And they put a wash sale rule in place, meaning that if you sell a stock, you can't buy it back for 30 days.
Whoa.
So that eliminated that. But in crypto, you can. It doesn't apply to crypto. So a lot of people were probably down on a lot of their positions. I know I did. I harvested a bunch of losses because I had a ton of positions I was holding that were way down. Like there were some of them were like 80, 90% down. I'm like, well, I'm not going to sell it now. What's the point? I'm just going to hang on to it. But I winded up selling them right at the end of the year. And then I bought them back like January 2nd or 3rd, pretty much at the same amount. And then I harvested those losses. So that right now, I mean, I'm sure the IRS is probably going to come up with a rule to like plug that loophole. That loophole. But for now, take advantage of it. So hopefully, some people did that. We'll see how this year plays out. Probably people are going to be up in 2024. I would imagine. I think this is going to be a pretty good year. We got like 3 more rate cuts coming. They just did another 1.2 billion. In spending, the stimulus package again.
Yep.
So it's kind of
an election year. They're going to bring the rates down as much as they can.
They want to,
what's the rates now at this point?
Oh, it's like 7. Like there was like 7% or something. I haven't even checked lately. I've been so busy. But you're in the process right now, right?
Yeah,
are you getting good
I'm under contract for a house right now.
Okay.
I didn't even ask them what the rate was. It's gonna be somewhere around 6 or 7, I think.
Okay, yeah. So
I'm buying as an investor, so they always add an extra percent when you're buying.
Right. Yeah, because it's not like a primary residence.
Yeah.
So
okay. Steve, we spoke earlier about Puerto Rico taxes and crypto.
I'm gonna finish with that.
Okay, cool.
That's on my agenda.
That's very important
with that. So I'm gonna go like quickly over
go ahead,
kind of the stuff we're talking about. So I think he's gonna pull up.
We're gonna put it on screen. All right, let's do it.
Let's go.
This is so I don't know if you could blow that up, but look at so here's a 1040. This is the 221040, right?
Yeah.
You got your name, you got your social security number, you got your address, and then you got your filing status.
Yeah.
Look what's number 3 on there. Digital assets.
Crypto.
That's new.
Oh,
that's like now everybody's the IRS doesn't know what they're doing. Like they don't have they're not really paying attention. They are. They've been they have like this Operation Hidden Treasure that's has been since 2018, I believe. Was it 20 or 2020? It could be 2020. I don't quote me on that, but there's a task force at the IRS where they're actually employing people to do on-chain analysis, where they're using tools and they're tracking big wallets, little wallets, and they're just data collecting. Most people, probably over 80% of people, are not filing anything on their crypto. They think they're like totally invisible, right? So there's this thing called like, unless you're going in some route where you're using maybe a VPN and you're using some different type of exchange, like maybe like KuCoin or something, like they don't request your personal information.
Yeah,
that's called KYC. It's called like know your client.
Yeah.
So these are the data points that they need to know in finance, like who is this person, right?
Okay.
So it's got your.
And this is new. Didn't this new thing with like digital assets? Didn't that just come out like last year?
Yeah. So we've been getting that on our like they just moved that on page 1. So now they're going, and then if you look at page 2, if you scroll down to page 2 towards the end, that's where you sign it, right? So go down to page 2. So look at what it says right above the signature, under penalties of perjury. I declare. That's where they get you. Okay.
Yeah.
So now they have the legal foothold on you. And
so if you don't put your crypto in there, you can literally
technically,
mess yourself up.
Yeah, technically, and the IRS is not wanting to put people in jail. Obviously, that's not their main thing, right? They want money, right? So they're going to always give you the opportunity to come clean. I've had cases where guys have owed hundreds of thousands, and it was like blatant tax evasion. And they gave these guys breaks. They just want money. They don't want it doesn't serve them to go. But to take a criminal track to it.
Yeah, I mean, I've worked with IRS agents before, man. Like they're really not looking to arrest people unless it's like egregious. 9 out of 10 times when IRS criminal investigations after you did some other crimes on top of the money crimes, which is why they're not coming after you, because you got that money illicitly in the first place.
Correct.
But if you're making a mistake or you didn't know to label something or whatever it may be, typically it doesn't rise to the level where they're going to come after you criminally. It's just like they'd rather get money from you. Right. That's what they'd rather do.
So question, will this trigger an audit if I don't put crypto down on my form, 1041?
No, not necessarily. This is all, they are data collecting right now, so probably they're using this not as a tool to go after specific individuals. They're using it as a tool to figure out who's actually saying that they have like how big is this? How big is because we're talking about that we're like maybe 3 trillion. I think once it gets the entire market cap of all crypto, right? We talk about that is like probably the size of like is a little bit bigger than Apple, right? The equity of Apple, the market cap of Apple.
Really?
Yeah. Okay. So it's really small.
It is small.
Worldwide, right? Worldwide,
from a worldwide perspective.
So I don't think it's going to be really like significant where like once it gets to like 10 trillion, now it's significant. Now you're talking about like
did you put for us like that we had crypto I guess last year, or no, was it not on the form last year?
It wasn't on, so now it's on now.
So this year,
so now we
I have to tell you how much I have.
So
okay.
So you're gonna have that. Actually, those may become useful because we may use that to offset. I'm assuming your positions would have been down last year.
Yes,
when they calculated some of those positions. So we'll
how does that work then? So like, because like obviously crypto is volatile, it's going up and down every single day. Do you just tell them how much of each coin you have? I guess
no. So you don't. No, they don't care about that. That's more for foreign bank accounts, right?
Okay.
So that's under the foreign bank account.
So how would you even properly estimate what you're?
So you don't. So what you do is you get like a software program like CoinLedger. Right, CoinLedger pulls in. You plug in. You connect your wallets in there, and it can go on and it can pull like all the DEX, like the decentralized exchange information, all your trades. It does a pretty decent job of doing that, and it'll scour the blockchain, whether it's Ethereum or whether it's Solana, and it'll pull all the information and figure out what trades that you did or swaps. Or maybe you got airdrops that you claimed, or maybe you have like you did some like yield farming where you're getting like you're like staking your crypto and you're getting like interest basically on it of more coins. So it'll calculate all of that, and then it'll give you a pretty good indication of like
Does it timestamp it to that day? I guess.
No, not really. It just pulls everything together in a nice report and saying, okay, we saw you took this coin like Ethereum and you swapped it for USDC. But you bought Ethereum at 1,500, but when you swapped it to USDC, it was at 3,000.
Okay.
Right. So it'll calculate that transaction because that you swapped it for a stable coin.
But obviously that report is generated as of that day when you do it. Like
no, so it takes January 1st. and it all the way till December 31st.
Because it's the year prior. Okay,
So it'll
I'm
take
sorry.
that calendar year. Yeah.
Okay.
And then it'll
the average of the year.
It'll pull whatever transactions that were taxable events. It knows that just based on, because blockchain is just basically a public spreadsheet.
Yeah.
That's all it is. And it's got all the transactions in there, so it knows based on your address and your wallet and the cryptos that you had. They have specific addresses. It knows how to calculate that. Now, the only problem with when you're pulling all of this data off, you have to like analyze the report it prints out. And it'll kind of flag some like CoinLedger is pretty good. It'll flag. It'll say, hey, by the way, we see that you got one side of the transaction here, but you don't have any cost basis on the other side. So you need to look at that deeper. Gotcha. So maybe they transfer some crypto over from another wallet. So, and it started with like a zero basis or something like that. So then
their balance sheet's off.
Yeah.
Okay.
So that's why you got to work with this, probably in most cases, you probably have to like do that for your accountant and give them the reports and kind of walk them through, because a lot of these guys don't know what they're looking at.
I'm confused right now just listening to you. I'm like, God damn.
Yeah. So imagine like, 4 or 5 years ago, somebody came to me. I would like a swap, a yield, like liquidity providing airdrop. I would have no idea what they're talking about.
Shit, we trust in Steve.
Yeah, man.
Yeah,
man. And I would say, so, dude, what I'm realizing is like this year and the years to come, your accountant needs to know crypto, man. If you have
the
anything,
future. This is the future of finance.
Know it.
Yeah.
I mean, that's crazy that they just put it to the front page randomly like that.
Yeah,
hey, but digital assets now.
Well, yeah, and now they got the CBDC, the central bank digital currencies, which the U.S. has one. Yeah. And most major countries do have them too as well. So that's the next level. And I have my own like tinfoil like theory of how that's going to be rolled out. I think it's just probably going to be through the stimulus. Yeah. So they'll have people like, okay, we're gonna, they just did a $1.2 billion stimulus package, right? Mm-hmm. So they'll be like, okay, maybe we have some like COVID type of event where they're going to be like, okay, if you want to claim your stimulus money, you're going to get $2,700. How are you going to do that? We're going to give you CBDC, and then you're going to set up a bank account. You're going to go through your KYC, hook in there through your phone, and then everybody's going to want that money, obviously, right? Yeah. And then that's how they're probably going to use some method. That's my theory, to usher in the digital bank currencies, I think.
Wow.
Yeah.
That is
some
deep.
point in the future.
Listen, so Steve, let me get this straight. So you're telling me, let's say I had crypto back in the day. I was in the club popping bottles, getting lit, buying Lambos, Ferraris, all that fun stuff. They're going to tax me all the way back then, my crypto, even though it wasn't on the form in 2021, 22?
Yeah, so what I would say is like, you can go back and I think there's going to be some
grace?
Yeah. So what happened was like back in, I can't even remember, maybe like 20 years ago, there was a lot of like contractors that were working for construction, like developers and stuff like that. And a lot of them like didn't, they were like on 1099 basis or whether, so they would just not issue 1099s. So it was becoming a big issue because we had a real estate boom. And what the IRS did was put together like a forgiveness, like program and saying, hey, file all the 1099s, come, and then they weren't going to kill you on like all these penalties and interest. Yeah. And it was like a coming to the Jesus, like, okay, here's your one chance. It's going to be like a forgiveness program where people came forward that would pay whatever they probably were supposed to owe, and then they get caught up and then promise to stay in compliance in the future. Okay. So I think there's going to be something like that because the underreporting it's crazy. Like I think it's probably less than 10% of people are probably, honestly, that are involved with crypto that are actually reporting on their tax return. I would probably estimate it's like that, yeah. There's been a couple of studies on it. I had some good numbers when I did the course. I don't have them offhand, but it was ridiculous. I think like in 2015 or something like that, the IRS did like, similar to that, where they're like, did you do anything with, like, they figured out like who was reporting like Bitcoin or something like that, and they knew how many people like were involved with Bitcoin and sold it or whatever, maybe based on like blockchain analysis.
It's public.
It is, yeah. And then I think there was only like maybe 800 people in the entire United States, and we knew like thousands and like millions of people like were involved with the crypto at that point in time. So that just goes to show, yeah. And then also the general mindset of people that are involved with crypto are kind of those that are like, I wouldn't say anti-government, but like anti-establishment.
Yeah.
Right. So that kind of like, it's like, there's a way to do it. You can make money. You can make a lot of money on it. You can do it right, and then you could sleep at night and not worry about. If you think for a second that the IRS is like stupid, and it's not going to come after you, it's not going to find out. Like, once you get big sums of money and you got you're moving like whale amounts, like you're in the millions, then I don't know if it makes sense to like to stay off the grid and not report it.
Yeah. I'm not worried, but let's say I was a Nigerian scammer. Let's just say I got the tip that IRS is looking towards my crypto now on the forums. If I move to Puerto Rico, if I move to maybe Bali, will they come after me then? Because I'm gone out the country.
So that's a good question. So I mean, Puerto Rico has Tax Act 60. That's like Condado in Puerto Rico, just outside of San Juan, is like a big crypto haven. So a lot of people have gone there that have made vast amounts of money and taken advantage of the Tax Act 60. So basically, and then like they'll become a full-time resident there, and you only pay like 4% in capital gains rate. That's huge.
That's a big.
But the problem is, you are like, let's say you're planning on doing that, and now you have this all these capital gains already, and like you have millions. Now you want to move to Puerto Rico. All of those that you have made on the mainland are subject to the U.S. Internal Revenue Service taxing. It's not until you get there and you get an attorney, and then you actually sign all the paperwork, and then you identify your public addresses for your wallets, and then you start there. So you all that stuff that came prior is subject to the United States mainland. Nice thing about if you do a full-time residency in Puerto Rico, you don't have to give up your U.S. citizenship, which is good. You can't vote in the federal election, but if you don't have any sources of income or anything outside of the U.S., outside of Puerto Rico, then you don't even have to file a U.S. income tax return. You don't have to file that 1040. You just file the Puerto Rican government tax return.
Oh, wow.
So
interesting.
Hey, smart move, man.
Yeah.
Logan Paul, Luke Belmar.
Well, yeah. They're like, there's like some big time money there. So it's done really well for a lot of people. But again, it's been gentrified. So there's this pull on the island where, now once you get an area gentrified, it jacks up the real estate prices. So a lot of people in the mainland, they're going to Orlando because they can't afford to live there and buy a property anymore. So it's becoming, something like maybe like a Hawaii or something like that. So there's kind of that political uprising in there about that. So, but
we got some chats real quick.
Yeah, we can. Okay, so we got here. Arshad goes, I love you guys. I'm a multimillionaire businessman with my brother from Georgia. We own extended
stay hotels.
Okay.
And have about 1K rooms, event halls, etc. I just ended a relationship with my second woman because you can't fix modern Western women.
We got DZA says,
you're free now.
He goes, hi, FNF, quick advice. I'm 25 and I work 2 full-time jobs and just paid off my 18K car in 2 years. And I have 8K saved up after and would like to have more free time from one of these full-time jobs to network more. Any advice on which move I should make now?
25, full-time job. Yeah, bro, good job on paying off your car. I mean, listen, people's main expenses where you live and where your car as well. Car debt especially is going to be high, so good job on that. Networking itself, bro, you want to be in a major city where there's actually access, a lot of groups going on. I would say like Miami, Texas, even Vegas as well. So find a local area that's good for you, depending on what you're doing. Like, for example, let's say you're doing real estate. Meetup.com in your local area, find that meetup group, go over there, go to different events on Facebook, whatever you can find in that area for whatever your expertise is, go do that as well. But again, major cities, Texas, Miami, Vegas, New York, that's where you should be.
Yep.
Dr. B84 says, shelter fresh. Bro, tell me why I'm eating dinner, right? At Komodo. I look over to my left, I'm like, I know this nigga. What? Dr. B84 is eating dinner right next to me on a date. Shout out to him, man. He says, my girl is still bugging about our Miami trip last week. Good to see you in Komodo. The other day when I was celebrating my 40th birthday, 2 years ago, my girl weren't even looking at me. I spent the week in Miami with one. Yeah, 20 years ago, he was blind. He was most girls. Now he's doing well for himself, successful, and he's getting what he deserves, recognition. So shout out to him. Happy birthday, bro. We got here, Darfur Gang says, Steve, my brother owns a commercial property. How can I reap the benefits or tax benefits using the property for my business without him necessarily giving up ownership to me? So giving up ownership, he wants benefits from his.
I mean, yeah. So you're not. I mean, the only thing you can do is rent the property from him and then take a tax deduction on your tax return for the rent, if it's legitimate. But beyond that, I don't know. Like, what else? What else can you do? That's about it. Yeah, because if he doesn't want to relinquish ownership to you, then you're not going to be able to take any depreciation on it.
Damn. Okay. Jay Hurd. I'm a freshman in college and plan on following the accounting path. How would you build skills, do internships, and network in the field to set yourself up for success for accounting?
So I don't know if you're interested in taking the CPA track, but definitely I would get in with a CPA firm. I mean, they're always looking for people. They're always hiring. They're always short-staffed. And you're going to be exposed to a lot of things. That's a good feather in your cap to put on your resume going forward. So that makes you like much more employable and attractive.
I would find as well the best, or I want to say the most plugged in accountant in my area on LinkedIn. Mm-hmm. Hit him up if he's going to respond to you at least, and say, hey, I'm a guy looking to get into accounting. I'm willing to learn, spend hours working for you for free. Would you mentor me? Just something like that.
I mean, you don't even have to do that. There's a lot of CPA firms that'll take you. And, you could just do like run to the post office, answer the phones, or just do just very basic stuff, fill out organizers or things of that nature where you can get your foot in the door. They're always looking for people to help out in the office. So, because we're busy.
That's good.
Water Dragon says, question, what is the time limit to go from, this is a good question, sole proprietor to LLC and same from LLC to S-Corp?
So it is up to 24 months. I have, if you go to my bio in my Instagram, I got the A to Z LLC to S-Corp, and it walks you through step by step with videos in there and everything on how to do that, what forms you got to fill out.
And we did a whole episode on this.
Yeah.
If any of you guys are watching this podcast right now and you're you're a sole proprietor, you're an LLC, you're fucking up. You need to switch over and become an S-Corp immediately. The only time it should even be an LLC, correct me if I'm wrong, is if it's a real estate property, right?
Yeah, because we talk about it all the time. Because we're going to wind up filling out, it's called the Schedule C of your 1040. That's the most audited form in the IRS. It's the #1 audited form. And also you're going to be winding up to pay whatever profit you declare on that Schedule C is going to be subject to 15.3% self-employment tax. Then you got to pay ordinary income tax on it.
Bam.
So
you're getting like double tax.
Yeah, it's steep. So you're talking.
So all you guys, you need to switch over to an S-Corp immediately. Mm-hmm. You guys that have just a simple LLC or a sole proprietorship, you're fucking up, man. You need to switch on over to an S-Corp immediately.
Yeah, if you got a $50,000 profit on that, that's a $7,500 savings right off the bat just by doing that.
Wow.
$7,500 on a $50,000.
That's
profit.
another question I know they would ask. How much do I need to earn per year to switching over to an S-Corp makes sense?
Anywhere between 40 and 50. Once you hit like your net profit, once you take your income, take all your expenses out, if your net is around 40 to 50 grand, then you should be an S corporation.
Wow.
Okay, not gross.
Not gross. No.
So
net.
if you're actually netting it and that's what you're getting, okay, 40K minimum.
100,000 in income. I have 50,000 in expenses and everything with my car, my rent, and whatever expenses you have for your business. And my net profit
is 40K. They need to be an S corp.
Then S corp, yeah.
Okay, all right. Nigel Cardosa goes, hey, Steve, is accounting still a good career to get into in 2024? Where is the best place to start? And how can you progress from 0 to 100? Thanks, F&F. Good question.
Yeah, become a tax professional and learn about crypto, and you would be, this is where the future of finance is, right here. So
that's how you diversify yourself as an accountant.
You're going to need a lot of help doing that. There's actually even people that are they're not even like true tax professionals. They just know how to go in and calculate all of the gains and losses and figure out put a report together for accountants.
Wow.
That they're putting these services together, and that's all they focus on. And they're making a business out of it.
Gotcha.
That's how big it's becoming.
Okay.
I think
versus if you're an accountant and you can do it yourself.
Right.
Wow.
Right. So and understand it. Yeah. So I mean there's people that just like, okay, this is a little niche. I'm going to focus in on this, and then because we need help with that. I don't have time to go out and download people's wallets and hook them together, and check everything.
Yeah.
It's this is something that either they have to do and bring to their accountant, or they have to get somebody to help them do it.
Wow,
bro. If I was a CPA, I would just hire them to work for me.
Yeah,
shoot.
That's what I told them
as well.
I got a couple of guys. I was like, look, in my group, they're like, if you guys can learn this and master this, you will be like, this is, the firms are going to be looking for people like you until the software and the interfaces become more integrated, and maybe there's like an overlayer of when they're trying to come out with a couple of these, they call them like interoperable, like they can layer on all the chains and bring all the data in.
And you guys see it's official. It's officially on the tax form now. So it's like this is they're not messing around anymore. Now it's actually, this is the first year that it's on the 2023 is the first year it's been on the tax form. So
and they had, I might have mentioned it, the Operation Hidden Treasure, right? That was like, I think 2020, right?
Yeah.
So like, think about it. Last year and maybe like 2022 and 2023, the market was down, right? So a lot of these guys that now, like, they were like IT, right, is like a soft spot. Like there's a lot of unemployed IT guys. Yeah. So the IRS can pick up this talent. And they started, like, when the market was down, they were picking up this talent. And now they're putting them to use as IRS on-chain analyzers.
Crypto auditors almost.
Basically, they're just doing like on-chain analysis and gathering data and putting things together and figuring out, like,
wow.
Yeah.
Would you say, I mean, obviously this is the first year they're rolling it out, so there's always going to be kinks or whatever, but would you say within like the next 5 to 10 years, if people don't appropriately, I guess, declare their crypto or for tax purposes, they're pretty much going to be in a situation where the IRS will be in a position to come after you?
Yeah, so what they did with Coinbase, there was a case where they could just go in and basically, it's called a John Doe, they'd send a John Doe letter. So what the IRS was doing was, what Coinbase viewed it as was like a fishing expedition. Okay. So they were trying to like send out like, oh, give us the name of all the people that are on your exchange, because they wanted to see if they were looking at their 1040 to see, are you reporting?
Marrying it up,
right? So, and then they fought it, but they lost. They lost that case. They went to the Supreme Court and they lost. So then
do you think they'll be able to?
They're going to strong arm these, and these chains want to stay in business, right? It's about money, so they're going to do whatever it takes to comply.
So they won this time, but IRS can come back again, try it again, and they can keep trying.
There's a big case right now. So, and it was a young guy. He's a Russian developer. So he wrote this program called Tornado Cash. It was a mixer wallet. Yeah. And the Dutch government basically now is indicted him. Now this case is going on. So they're saying like this guy is responsible for $1.2 billion worth of like money laundering in transactions.
Because people utilize the service.
But it was all he did was write the computer code and then release it. So now they're saying, well, you should have known that these transactions were like money laundering transactions. They got identified as money laundering. So now they're prosecuting him. He's pleading not guilty. He's going to fight the case. But, computer code is like in our law, in our common law in the United States, is protected under freedom of speech, right? Okay. So you can write computer code. So that's all he did. It's just a tool that anybody could use. It's a public like mixer. But the mixer wallet is a very useful tool to have in crypto, because there needs to be a way for business to business, B2B transactions, or let's say at some point you're going to start paying your employees in crypto. You need a way in order to pay those employees where people can't track it on chain. Yeah. And figure out how much you're getting paid and how much he's getting paid and how much I'm not getting paid, or how much you paid for a certain, like these transactions need to have some sort of like, mixer wallets are useful in that regard, obviously, but then you have, the nefarious actors, of course, using it for
fuck it up for everybody.
Yeah. So.
Damn. Okay. So, I mean, so the governments are clearly cracking down, man. So, guys, obviously this is stuff that's very important so you don't find yourself in a pickle. What do we got? Alex Scott. Hello, guys. Big fan. I have a question for Steve. I have a Schedule K1 Form 1065 from some investments. I use Free Tax USA for my software, but there is no section to file that form. How to file this? Yeah. So I don't know what. So on that form, you're going to have boxes and telling you where you got to put it. So on the there's going to be like regular rental income. You could have interest. You could have dividends. So wherever you could align those two on your tax return. So wherever interest goes, you're going to put that amount there as interest. And wherever dividends goes, you're going to put that amount there as dividends. If you have a capital gain, things of that nature. So whatever, you're going to see those boxes on your K1 on there. If you don't have like the actual input screen on that software, it sounds like probably a rinky-dink software that just only handles like a W-2 maybe at the most or something like that. So you might have to upgrade your software to
have a data entry that handles the K1.
Gotcha.
All right.
Trigger Down goes, if I have a Metamask wallet and receive payments in crypto, ETH, or BNB, is that subject to tax?
Absolutely. That's a great question. Yes. Anytime you receive that's money that you're receiving for your rentals. So that goes under rental income.
Damn.
So that's what's construed as. That's not a cap gain.
Oh, wow.
So yeah.
Really?
And then, yep. And it's valued at the day, at the time it drops in your wallet and you get it. So you have to value it at that time. Then you have to deal with if that goes up. So let's say, I drop you some Bitcoin and it's at 65,000 a coin, and then it goes up to 70,000. You're hanging on to it. So now you received the rental
000?
income, right? But then now it's at 70. Now you have a cap gain of 5,000 on top of that. That doesn't happen with U.S. fiat, like currency. When you get they pay you and you put it in your Bank of America account because it's flat, right?
Yeah.
There's no up and down. There's not volatility in that. So that's the difference with crypto. So you have that little nuance with the crypto.
Wow.
Damn, niggas be taxing.
Yeah.
Wow.
Yeah.
So
That's crazy.
I think that the biggest takeaway from this is that, like, it's not a taxable event just when you pull the money out. It's a taxable event
For swapping,
for
just
all that
having
stuff.
it on a wallet.
Damn. Okay.
It's swapping. It's getting airdrops. Like that's another one. Airdrops are big. So a lot of like with these meme coins and like these people, like, we're gonna give, like you can have these wallets out there where you're getting all these airdrops of coins and stuff like that. If you don't go out and claim them, then they're not really yours. But if you go and like, there's a process to claim these airdrops, and then once you claim these, then you have to recognize the value of that as receiving like income.
Wow. All right.
Whatever value that was at the time you got the airdrop and claimed it.
Okay.
What do we got here? Co-form 2019 sales 2020 haven't filed taxes because not sure to file a self-exempt employed or S-Corp. Ups and downs with the food truck and the LTD on cash flow at the time of an account. Cash flow on point since 2023. Damage not filing per reform to elect as S-Corp. Man, he did a whole bunch of
That's business jargon.
Yeah. So I'm assuming it's a company. He said something
pull it up on
about
screen too.
He said something about being an S-Corp. So I'm assuming you're probably an S-Corp or maybe want to be. 2019 is a little old, despite that window's already passed if you're not. So then you're going to be forced to put it on your Schedule C. But yeah, so what did he say?
He said he hasn't filed taxes because not sure if you should file as self-employed or S-Corp. Ups and downs with the food truck.
I think he means he means a sole proprietor, right? Sole proprietor.
Probably, yeah.
But the problem is 2019, 2020, you're already too late to go back and make an S-Corp if you haven't already. If you have, then you get them filed. Now you're going to have late filing fees because you're a subchapter S, which could be in the thousands.
Oh, my bad.
But like I said, you could at least for the 2019, you can get that one waived, but the 2020, you won't. So
send that question in again, please, like so it makes sense because
it's a little,
it doesn't really make sense, so we could properly answer it.
I'm Sonar.
I'm Sonar. Hi there. Question for Steve. I'm joining Big Four audit later this year. Do you think this is a good early career path? I know you're in the tax though.
Yeah, so I worked for KPMG. They still exist. They're one of the big guys. Yeah, that's a great. I equate it to like a finishing school. You'll learn proper business etiquette, how to speak, how to carry yourself, how to write very well in a business manner, and how to be in like big companies. Where you get on hopefully you get put on big audits where you're rubbing elbows with some high executives, CFOs and controllers and things of that nature. So definitely that's great path to take.
All right.
Bullish on
just so
me.
you guys know, we upped it to 20. But get your questions in and we'll answer them. Hi there. Okay. He goes, I day trade the futures market and do e-commerce. Is there a way to set up both separate businesses under one entity? If so, what? If not, would I just do two separate S-Corps?
Yeah, just do two separate. That's like, that's like being a plumber and like a stockbroker. I don't know why people do that stuff.
Okay.
That's that flow.
He goes, I'm a 1099 cable contractor. I have a balance of $130,000 that I haven't paid and I have to file again this year. Is it a problem if I don't pay for a bit getting it together?
Yeah, so you could do an installment sale.
13,000. Excuse me, 13,000.
Oh yeah. So you're under that threshold. I think it's like either 15 or 25,000. Yeah. So you can set up an automatic payment plan with the IRS. You just go on, just Google like IRS payment plan, and just make sure you're on the IRS government website. You can set up a payment plan for that.
If you're under 25K.
I think it's 25K. Don't quote me on it. I know, but I know the 13,000 falls under that. Is that 13? Yeah, it's 13,000.
Okay.
Yeah. So just go online, and you could do it right online and say, just it's an automatic approval for that dollar amount, where you just set it up as an installment, figure out how much you want to pay per month, and then just do like an auto debit on there.
We got here social made 70K profit on social media this year, sent everything to my accountant, and he just self-employment ended up paying 20K taxes. Is there a way to save any of this next year?
Damn.
Yeah, so just form an S corporation, and then your payment rails, right? Who's paying you? You need to give them that. Like you're gonna start an S corporation. You're gonna have a tax ID number for that S corporation now, and you need to set up your payment rails in that new EIN number and new name of that corporation. So then you have to have a new bank account, obviously. So it's kind of a pain in the ass, but it's obviously going to save you a ton of money if you're paying that much. Yeah, he got you. And a lot of these guys, they don't have time to tell you this stuff. They're so busy. They're not going to sit there and spend the time. They're going to be like, fuck it. You're just, dude, you owe this. I got to go to the next one. Yeah. That's typically how these guys are. I've worked for different firms, and they just don't, like, I used to feel bad. Every time I have one of my clients that gets hit with a tax bill, I don't want people paying any more taxes than they have to.
Especially when it's a big one and they didn't see it coming.
Yeah. I mean, I like pay the tax that you owe to make sure you're doing things right and you're not evading tax, tax evasion. But I hate to have people pay taxes.
Yeah,
I detest that, because your money's better in your pocket, spending it the way you see fit, not the way these idiots in Washington D.C. are doing.
What if I have a Roth IRA and I decide to trade within my IRA? Would that
That's
avoid
great.
taxes?
Yeah, so you could do like a self-directed Roth IRA. That's a big option. Mm-hmm. Now, the only thing, a lot of these guys are young. They're not retirement-minded. Now, they want access to that money.
Right.
Are they going to wait till they're 59 and a half to pull it out and use it to buy that Lambo or to buy that house? So that's the thing that you got to figure out. So maybe you take a portion of that and put it under there, so you grow that as a retirement savings. So when you're that, a lot of these guys are short-sighted. They want to, they don't think in those terms. I think when you start saying 401k and you start saying IRA and SEP and all this crap, these younger guys, they don't think. They're thinking, I want to get that car, I want to get that house, I want to take,
I can relate.
Yeah.
Oh boy.
That was for you.
What's next here?
We got some chats here.
All right. Can you enlarge that for me, man? I can't see.
Miss Deula.
She says, with an S-Corp, how do you ensure you do anticipate how much taxes by year end? I have an accountant and paid quarterly taxes last year, but this year my taxes were surprisingly high due to a good year. How do I make how do I make it work so it's not a surprise how much I owe on distributions?
So you shouldn't owe anything on distributions. Again, that's just like kind of offboarding your crypto too, right? So you measure your taxable income based on the income you have, the expenses you're gonna have support for on your return, and whatever that net profit is. That flows on your 1040 from your S-Corp, and then you pay taxes on that. Doesn't matter if you keep all that money in your bank account or you drain it all and you go on a shopping spree. You taking money out of your account is not a taxable event. Those are distributions. So,
and guys, these are chats from Castle Club. So if you want to be able to, get involved in the show at a lower cost, it's $20 to join castleclub.tv, man. You get your questions asked like this. So it does save you a bunch of money in the long run if you want to super chat.
But it looks like her accountant set her up on, I don't know if this is a girl or not, but
quarterly
guy. But yeah, so what they do is and I do it for my clients too. It's based on again, that's called the safe harbor rule. They're going to set you up they'll take 110% of your prior year, cut it up to 4 for each quarter, and then you pay in your vouchers every 3 months on that.
Clarifies in the next chat.
Okay. I also have an S-Corp 1099. Okay, this follow-up. 1099 in healthcare. Do I have to register and pay multiple state taxes? Different accountants seem to do different things. Register for some and not register others.
So she's it sounds like she's a traveling healthcare professional in multiple states.
Probably. That makes the most sense.
And because what happens is it's called nexus. So when you're physically going to that state, so let's say you're from Florida and you go up to New York and you're physically that state, whether you're still being paid at a 1099, technically you have nexus in there. But it depends on what they file, though. So if the IRS if doesn't go to the state jurisdiction when they do the 1099, then you probably can escape the filing requirement on there. I wouldn't just go, oh, okay, I worked on it. Technically, that state does have, it's called nexus over you because you
worked in their state.
Yeah, but you're really kind of not registered. That if you just get the federal 1099 and nothing on the state side, because it's not like a W-2 where they have to file New York State on the W-2. With the 1099, there's really no, I got to file a form with the 1099 New York, jurisdiction, New York State tax department. So they probably don't. So I personally,
that's on the employer, I guess, right?
Yeah.
She has to ask her employer to figure out? Or?
Yeah. So she's probably just getting a federal. Just put on your federal and keep it on there. And then whatever jurisdiction you're in state-wise, obviously you're going to have to adhere to that.
Okay.
But, yeah, so I wouldn't create all these other filings with a nexus and all that shit if there's no filing on the state. Only when it comes to W-2 do you have to really worry about that.
Okay.
Wait, is she in healthcare?
We're assuming. We don't know.
It sounds to me
is
she's
she a
probably
nurse?
It's probably like a traveling nurse.
There we go.
All right. Hey, I have a $10,000 crypto, and what type of taxes should I expect and how to avoid? What is capital gains tax and gas price? Please explain.
So if you onboard and you buy Ethereum and you haven't done anything with Ethereum, you didn't swap it for another coin, you didn't trade it, you're just sitting on it, you have what's called unrealized gain. So that's not a taxable event. So
that's like if you buy it and just let it sit on the Coinbase like most people do.
Yeah, not until you swap that for something else. Then so based on that question, it sounds to me like it's an unrealized. So there's no capital gain yet on it.
Can you explain? He doesn't know what a capital gains tax is and gas price is. Can you explain that?
So capital gain is I buy Ethereum for $1,500 and it goes up to $3,000. Now I have a capital gain of $1,500.
Okay.
Right, but it's unrealized. It's but it's not until if I swap it for another coin
or cash out.
Yeah.
Okay, and that capital gains can also be you buy a house and you sell it. There's capital gains tax on that.
Right, because it appreciated in value and you sold it for more than you bought it for.
Okay.
The cap gain is based when you buy it. It's called your cost basis, right?
So the capital gains there needs to be appreciation in it.
Appreciation in it, yeah.
Okay, all right. If I didn't claim my crypto, should I claim it now? And gas prices? What he wants to know. What is it? What's the
gas price? Is probably talking about the Ethereum gas price. Is like anytime you swap or do any transaction on any blockchain, whether it's Solana, whether it's the Bitcoin Lightning network, or it's the Ethereum network, you have to pay a fee in the transaction of that layer one token. So in Ethereum, they call it GUI. It's freaking weird. It's like these nerds that came up with this weird stuff. So they call it GUI. So that's the Ethereum fractional. It's like you have a Bitcoin, it's cut up into Satoshis, right? So the Ethereum is cut up in GUI.
Gotcha.
Yeah.
Arigato.
If I didn't claim my crypto, should I claim it now in my tax problem? I already put it in my taxes. Also, do I sell crypto with little tax? Oh, also, how do I sell my crypto with little taxes?
So if I didn't claim my crypto, should I claim it now in? Yeah. So I mean, it depends on the dollar amount. I would have to have more information. I would say if it's only a few hundred. If you're talking a few like 10,000, 11,000, that would that. I'd have to look at the greater picture of all the other sources of income that you have, so you don't get killed. But you could probably it depends on the dollar amount. So that's a hard question to answer without any specific numbers.
Okay.
Yeah. All right. Ken Rose says, evening crew, evening Mr. Cologne. If I were to take a profit in crypto and first apply the entirety of it towards my student loan and or my car loan, would I be able to write it off as a tax deduction?
No, because those are just loans. Yeah. So when you got the loan, you didn't declare it as income. When you pay it off, you don't declare it as a deduction.
Ooh.
That's how it works.
Yeah.
Okay.
Crypto Glory says, should I make my brother a legal renter of my primary residence? I also live there too. What type of tax benefits could I receive? He is a long-term renter for sure. What would you do in my position?
He a bum like Chris.
Because I guess his brother probably pays him rent.
Yeah, if you guys get along, then yeah, do it. But if you don't get along and then you get in a fight and you want to kick him out, then he's going to squat on you.
He's a squatter.
You got to turn into Leo.
I'm not fucking leaving. The show goes on.
That's what he's going to tell you. So make sure you guys get along, bro. G Bar goes, made up $300K last year as a W-2 employee, open an LLC, but still have to pay over $13K in taxes, and they take 35% down each month from my commission check.
Holy.
How much to avoid higher taxes the LLC is for my rental?
Holy.
So I don't know if you're positioned to become a 1099 employee with that $300K. Probably sounds like you're. I don't. You might not be able to do that. Open up was last year. So if you purchase a property, you could take what's called depreciation, and you could do a cost segregation study on your property, and you could get a massive amount of depreciation in the first few years. That can you can get up to. I wouldn't quite declare you a real estate professional, but you can probably take up to a $25,000 loss maximum on there. So,
and being a real estate professional helps a lot for tax purposes, guys. It's huge.
Yeah.
Yeah. But what does one need to become? I know you label me as one.
It's hours, so you have to demonstrate, and then you have to determine that you actively participate in it, that you're involved with the managing and doing the leases,
and you spend
renting
hours.
them out. Hours, yeah. So there's qualification, like there's a whole, and they're pretty strict on it. So you go through. So we did that with you, like having a real estate license or broker license too is another good indication that you're a real estate professional as well.
Oh, that might be worth it then in that case, because I've always said you don't need a realtor license at all.
Yeah, some people just
to be an investor. It's a waste of time, but for that purpose, because getting designated as a real estate professional for tax purposes saves you so much money that it might be worth your time to get that real estate license.
Right.
Okay. And then does the amount of properties you have? I mean,
not really. No. Yeah, that's just,
No,
you could have one, you could have two. Yeah.
Okay, so it really comes down to more hours.
Correct.
But having more properties will allow you to be like, well, I spend this amount of time because I have this many. So
it's like they look at it like, okay, what's your main thing? Are you doing like a obviously your $300,000 a year W-2 wage? That's your main job. So it's going to be pretty hard for you to substantiate that you're doing something greater than that.
Okay.
Yeah.
Okay. All right. What else do we got here? Fredo Mauricio said, I make $70K a year at a job, won $100K last month playing a poker tournament. Can I open an LLC and file as a poker professional? Also, can I invest in real rental properties to avoid paying a hefty tax? God damn, this dude trying to find a way to finesse.
I mean, it makes sense.
You can make $100K last month playing a poker tournament.
Because you're gonna. So you probably have a lot of travel expenses. I don't even get comped at these places where you're playing these. Is that a thing like with the poker pro? Do they get comped at these places like free hotel, lodging, meals? You probably have a lot of expenses there. So yeah, I would consider if this is something that you're making a career out of, then definitely legitimize it, get incorporated, become an S corporation, and you could write off all your travel, your meals and your lodging and all that stuff, any expenses that you're incurring to make it to these tournaments.
Shit. Okay. All right.
Wait. So question: if I make money off of let's say gambling, I made profits. Is that going to be is that taxed?
Yeah, so you get these casinos over $600, they're going to have to issue a 1099. So a lot of my clients, they go to Hard Rock or whatever, and they'll win and stuff like that. So then you have to declare those as income.
Yeah, you have to.
Yeah, but see what the IRS did, you used to be able to declare, a lot of these guys, you could have been even because they lose just as much as they win, and then at the end of the year you tally everything up, and then you used to be able to deduct that right off of the actual winnings. Now you have to go and put it on a itemized deduction as your losses. Ooh. You put that on an itemized deduction, and the problem with that is you can't really hit the threshold to go over the standard deduction to be itemized. So it's almost like you just have to pick up the 1099 on the gambling winnings.
Damn.
Unfortunately, yeah.
So if I win a big parlay, I got to pay taxes no matter what, pretty much.
Yeah, because you're going to get a 1099. The IRS is going to see it right there.
The casino's covering them by giving you the 1099. They're saying, look, we paid this guy this money. If you don't pay y'all, then, hey, it's on him. Man.
Get his ass.
So here's what happens. When you get K1, when you get K1s, when you get W-2s, when you get 1099s, they have your social security number, your name, your address, everything, and that goes on your transcript. So they just hit a button. So if you don't file, I have clients that hadn't filed in 10 years, right? Oh, shit. But what happens is the IRS says, all right, you don't want to file. They'll give you the minimum deduction, right? They'll put you as a single filer, give you the standard deduction, no expenses on there, and then they'll put all your income in, and if it comes out that you have taxable income and you owed, they'll wait, but they'll file what's called a substitute tax return on you, right?
Okay.
And then you get it, and it's going to be plus penalties and interest and all, like, it's going to be big, right? You know, so it's going to be like maybe like 3 times of what you originally would owe.
Because they got the 1099s from these other entities that prove that they paid you.
Correct. Because I had an Amish kid. I'm gonna call him Seth.
How do you even contact you? You got rode on a mule and sent a message like.
So this guy, it's like
Brother,
his. So you know these guys are like off the grid. Like
Yeah.
They had,
brother. How do you even find you?
The horse is hungry now.
some of them had like this special religious exemption. I've seen it before. I forget what the name of it is. So this guy was working in Tennessee, and like the market was going crazy. They were doing, like, they're really good carpenters, right?
Yeah.
So he was doing all this carpentry stuff for all this developments and stuff like that, making millions. The uncle was making millions, and the uncle was telling him, don't file.
Shit.
So the IRS came after the uncle after like 10 years and said, okay, what I was telling you, like he had to go, and they gave him that forgiveness program, and they had to do all the 1099s. So Seth is in Sarasota now, and he gets all these 1099s, and then the IRS did all substitute tax returns on him, and he came out to like he owed like it was close to $200,000
Because he had made a couple M doing the carpentry stuff.
Yeah, so we went back, and I said, okay, let's figure. And he wasn't even making that much. He could make like 60,000 now, right?
Yeah.
So I was like, all right, let's do a deal. So I filed all the returns. It came out like, and you can estimate tax expenses in lieu of not having the receipts, right?
Yeah.
He couldn't, like, I said, well, let's estimate. Let's be reasonable. The IRS accepted it.
Yeah.
So we got his bill down way down to like, I got it down to like 50 grand, but he still didn't have the money to pay it. Wow. So we did what's called an offer and compromise. So then what happens is I'm like, how much money do you have in the bank? Oh, I have 6 grand cash. Okay. So you're going to owe 6 grand. How much is your house worth? I don't own a house. I rent. Mm-hmm. I'm like, okay, perfect. How much is your car worth? Maybe like 10 grand. You had a truck. So I'm like, okay. So the fair market value of that, 16. So we got his down to like maybe 17 grand, and it was called the offer and compromise. You compromise the balance, and then we put him on a payment plan on there, and then he got it down to like 17.5.
Wow.
Yeah, it took a while to do it. Like we had to do it in stages, but
talk about saving his ass. It went from a 200K bill to 17.5, and you had to, wow.
Yeah, I did a lot of, because I'm a certified tax resolution specialist, so I did a lot of that work. I knew all the ins and outs and like how to put these deals together and compromise. I don't do so much of that work anymore, but I still have the skill set for it. So
yo, imagine it's Caleb. He's like, sell my horses.
Yeah.
God damn, bro.
Bruh.
Well, he made it out. Thanks
man.
to you.
So I guess, dude, so like if you're getting 1099s, you better be filing your taxes because someone is reporting to the IRS that they paid you. And then if you don't go ahead and file a tax return that shows that income from that 1099, you look bad.
That's what's going to happen with crypto.
Okay.
So crypto is going to have a 1099 reporting system with all this. Like it's going to come out, and it's going to go on these people. It's going to go on their transcripts eventually. I'd say within 5
years, like these big
years.
exchanges are going to start giving 1099s to the U.S. government,
just like Morgan Stanley does, just like Merrill Lynch does, just like Charles Schwab does. They're going to have that. That's going to go. Yeah, that's coming.
So they give you that 1099, and if you don't have a mirror image of that when you file your taxes, there's going to be discrepancies and problems.
Correct. Yeah.
Oh man. All right. Don't end up like the Amish guy, guys.
Like Caleb.
What else? Yeah. What else do we got? Steve, I've been DCAing crypto since 2017. Never really took a profit. Now that it's going back up, I want to take profit and buy property. What's the smartest way to do that? Thanks, guys.
Shout out to Andrew.
Yeah. So again, he's thinking it from like, okay, if I take money out and I offboard, I'm going to have to pay taxes on it, right? So I don't know how you DCA'd and if you held your positions, and then when you like right now, it's kind of late to do any tax planning in reference to that. So you're going to have to get hit with the whatever that comes out when you do your calculations. There's not really much you can do, unfortunately. You kind of like already made the money. So you got to set these things up prior to doing this stuff.
Wow. Okay. I mean, damn. So let's say, for example, is there no way to get around that at this point?
Well, I mean, you can set up a retirement plan, but again, we're getting to the fact that he wants to have access to that money, right?
Yeah.
So
even with the real estate is
yeah. I mean, I'm dealing with a guy right now that's trying to do some of that, but he's gonna have to pay the piper. We're gonna calculate whatever he owes.
Okay.
He's gonna he made a lot of money, so he's willing to do that. But hopefully you did too.
I guess it's safe to say, like, if you're making money, puts them to the side in case you need some 1099s because I'm gonna come out to haunt you.
Yeah.
Holy.
Especially when you're getting 1099. Yeah, man. People think they could finesse like, I'll be straight. No, man. They know exactly how much money you made because the other party that paid you was covering their ass.
Yeah.
You know what I mean? So
it's like think of it like, hey, I bought Amazon and I bought it like $1,000. Now it's up to $4,000, right? And I want to sell it. It's like, what can I do to save on taxes? It's like you made the money. You know, you didn't set it up as a qualified retirement account, you know, an IRA or a Roth or something like that. But you want access to that money. So even if you put it in a qualified retirement plan, you're going to get hit with a 10% early withdrawal penalty on it, and then you're going to have to pay whatever taxes it's on there. So so I mean, there's not really much you can do other than calculate whatever amount you're going to have on the capital gains.
I'm not going to lie, bro. When I go to the mailbox, I see IRS, I get scared, bro.
Yeah.
I think about who? Wesley Snipes? Yeah. Hey, man, I'm blocked, bro. I'm not to be me. Holy. I'm scared as hell.
All right. So, guys, you got to set up properly, man. Don't be...
You stupid.
Don't be an idiot, man.
Match
goes WFNF team, mods, and CO Network, our Telegram. To get announcements for the show and events, and that's the link, official Fresh and Fit. Yeah, guys, that's our official Telegram. Get in there, guys. Get in there.
If you want the updates in real time, join that, and it's free. You see our live events, shows, pin in the comments, man. Go check it out, man. Really good.
What else do we got here? Okay, Steve, what is the process when putting a car under your business? Mine is currently a DBA and bringing in $40K gross. $40K plus gross. I'm assuming it means a year.
So the process, I mean, there's no special process. You just tell your accountant, or if you're going to do it yourself, you just list it for whatever the value is, and then obviously you're probably using that vehicle not 100% for business. So try to estimate like, okay, I use it for 75%. So then whatever, like if it's a $50,000 car, you're going to take 75% of that value, and then you're going to depreciate over 5 years.
All right, cool. I think we got like one or two more, and then we'll close out here, guys, because we got another show for y'all coming up. Master of None says, I invested in a rental home, fixed it up, total of $150,000, and opened an LLC for a BTM machine. Okay, 27.5K. All using money from my trucking S-Corp. My accountant said that those aren't tax deductible. Thoughts? So I guess he had his trucking business. He bought a rental home, fixed it up for $150K, and then he also bought a Bitcoin machine for $27.5K.
My accountant said that those aren't tax deductible.
Thoughts?
Well, you invested in a property, so that's not tax deductible. But if you're gonna rent it out, then you have depreciation on it, right?
Yep. And cost seg too, because he said he fixed it for $150K.
And you don't have you could do a cursory. I have a book out there on cost segregation. It's $17. Go in there, it tells you about how to do it. You don't have to hire, you don't have to pay like a huge cost segregation company to do it. It's a $150,000 property. You can figure that out yourself.
Yeah, I don't know if the fixes are $150K or the house is $150K.
Yeah,
that makes a big difference,
but still, even though, so let's say it's like if it's below like I don't know $400,000 or $500,000, then just do your own cost segregation on it, and then you get like depreciation. So that you could do that. Your accountant's probably not going to want to do that. And then what was the other thing? He's like a Bitcoin machine.
He bought a Bitcoin machine.
So
that makes money, like basically the way, because I have one of these things too. Basically, you people do transactions on it, and then you get a percentage of every transaction that goes through your Bitcoin machine.
Yeah, so you're not going to have much right off there because probably somebody's handling it for you, right? So you just get whatever the profit. It's
kind of like a standalone thing.
Yeah, but you're just going to pick up whatever profit you got on. Yeah, so that's not going to be tax deductible. So he's right in that respect.
Okay. What else do we got here? How do I mitigate my tax liability working as a high-earning W-2 employee? That's from Taj. And then recently won a lawsuit and will be receiving $50K after lawyer fees. Should I use a portion to eliminate my $7K collections debt? Damn, you got $7K in collections, nigga? Fuck wrong with you, man?
Yo, nigga pay one tit.
Damn, man.
Nigga cheap as hell.
Yeah, what the fuck,
Come
man?
on, bro.
Nigga, goddamn, man.
50K you won, man?
Or keep it untouched and used for my real estate and just work my money to pay off my debt. Yeah, you got $7K in collections, bro. What the fuck? You holy. Collections?
So being a W-2 employee, you pay the highest rates.
Yeah.
You pay the highest rates. There's not much you can do other than like put money away for retirement. And you have to do like either 401K or a traditional IRA. You can't even do a Roth because Roth's not tax deductible. So that's what
sucks about being a W-2 employee, guys. Like, this is why you don't really need an accountant when you're a regular employee and you don't have a side hustle or whatever, because it's very standard. There's not much to write off. Yeah. It is what it is. And then he said he has $7,000 in collections and he's gonna get $15K from after his lawyer fees. Bro, I would pay, if it's in collections, that's probably significantly hurting your credit score.
And also, he can call and say, "Hey, I only have like $3K.
Yeah.
Can I pay off this amount?" And they'll take it from you.
Well,
Are you 7K in debt? Or are you 7K in collections debt?
Yeah, because if you're in collections, that means your FICO score is shit.
Yeah.
Yeah.
And $7,000 is not going to get you a loan and to have a collection on your. So pay off the debt.
Pay off debt, yeah, 100%,
Yeah.
bro.
Yeah.
You gotta get the-
I don't know.
you gotta get your
Call
credit
them,
score
call them up on the phone and say, "Hey, listen, man, I want to pay this debt off. I only have 3 kids in my name, 2 kids in my name. What can we do here?"
And just so the audience understands, if it's collections debt, the way I'm understanding it and the way that you wrote it, that means that you owed money to a party. That party couldn't get that money from you.
So they sold it.
They sold that debt
Yeah.
to a collection company.
Yep.
Your credit score got dinged significantly. Now that collection company is over here messaging you saying, "Yo, pay, motherfucker." So,
Collection companies will negotiate too because
They will. They will.
because they're only getting that, like, hey, we can get like 20% on them. We'll split it with the company that
Exactly.
They'll buy these debts from these companies and get
For
pennies on
pennies.
a dollar.
yeah.
Basically.
So they'll negotiate. Like, let's say you got 7K collections. You tell them, "Listen, man, I only got 4." A lot of times they'll take that 4 and be good with it.
Yeah.
But do it the right way. That they're going to make sure they're going to pull it off your report
Yeah.
and saying that it's satisfied.
Make sure you get an email
Yeah.
or a letter saying that it's paid off in full. You're right.
Yeah.
But if it's in collections, bro, you need to get rid of that immediately, because you probably got like a 500 credit score. Off
A lot of
that
times, these
load.
collection companies, they'll do it, and they're like, "Oh yeah, sure, yeah, we'll take it." And then you wind up sending them the money, paying it, and then they don't take anything off your credit, and now you're screwed still,
Yeah.
and you're out the money.
But yeah, knock that out first, bro. Because you won't even be able to buy it. Goddamn, you want to invest in real estate? Yeah, try with a fucking 500 credit score, bro. You ain't gonna get no loans.
Sorry, sir.
They're gonna be like, "No, thanks." ARTs goes, "Hi Steve, I filed the 2021 late, had issues submitting returns via e-file due to missing our IRS pin. Had to mail returns in. Penalties and interest total $3,636. Any way to lower or eliminate first time
So
happened?"
I don't know if you were tuned in the beginning.
Explain
So
that.
you're going to do an FTA waiver. Get the notice. There's going to be a phone number on the top upper hand right corner. Call them up. Say, "Hey, I want to do the FTA." The person answering the phone is trained. They have the Internal Revenue Manual, and they go through this little questionnaire. They're going to ask you these questionnaires. You're going to say, "Okay, I filed my taxes the last 3 years. I've never had any penalties before, and here's the problem I had." You don't even have to give them a reason, and it's an automatic FTA waiver, and you could probably get that 36 if that's all penalties. The interest they won't get rid of, unfortunately, but the penalties you can get substantially lower. So yeah, do that.
Last one here from Ken Rose says, "So just to confirm, if I take profit in crypto, I should just pay the amount owed in taxes first, unless there are options to defer, and then cover my debts, school loans, car loans, etc. credit."
Perfect. Yep, do that.
There you go, Ken Rose. See, you learned something from today's episode. Steve, where can the people find you, man?
So you can find me
A lot
the
of
best
sauce on
place
this
Instagram. Seeing Beyond the Numbers is the best place. Just follow my page. After tax season, I'm gonna ramp up and try to do more, and as far as the social media and more educational free content.
Yeah, this is the busiest time of the year for you.
Yeah, so I'm gonna do a ton of free content, a ton of free trading on crypto, a ton of stuff that I'm building a community to. It's kind of talking about with what my son was only 22 years old when he passed away. So all this is in honor of him.
Yeah.
And that's is it. So I'm just gonna give all the sauce away to the young guys because we need it.
Yeah.
And
You don't
where
learn
my
this in
heart is
school,
at.
man.
Yeah, you don't learn this stuff in school, and we definitely brought in one of the best accountants here, man. I mean, guys, we really, man, we shouldn't even be teaching. We're giving you guys goddamn sauce, man.
Some real value,
yeah, man. So our accountant is literally one of the best, man. And obviously with arts, with the real estate, the podcast, fitness business, etc.
Yeah.
You're an entrepreneur, guys. You need an accountant like this by your side, man.
So and also
Absolutely.
DM me on. I'm really good at answering my DMs. I mean, this time of year, I'm the next couple of weeks. I might not respond right away, obviously, but I will eventually get back to you on the DM. So I love that you guys put questions in there. I'll come.
Seeing Beyond the Numbers, guys, on Instagram.
I'll to the best of my ability. If you provide me with the information, I'll. And if you want to do a one-on-one consult, it's a 1 hour. It's only $300. If you're
You should charge more, man.
Well,
Yeah,
we'll see.
bro.
Yeah, we'll see how it goes. Yeah. So once I start getting busy, I love doing those because it's a face-to-face Zoom, and then within an hour we even go outside of the scope of just taxes. Sometimes I'll just give them some good financial advice, some good business advice.
Put it this way.
Yeah.
I think this is the best way to really explain to the audience the value that you provide, and it is very simple. Guys, when I worked for the government, I made about $120,000 per year, right? And I paid $30 to $40K in taxes. I work with Steve. I made 10x that money, obviously doing the podcast and all the other entrepreneurial ventures. I paid right around that amount.
Yeah.
So I 10x my income, but I paid the same amount of taxes as when I made 1/10 of the money. That's what happens when you got a good accountant and you have a business and you're an entrepreneur. You got real estate. So this is why guys like Steve are invaluable, especially if you're going to get into the real estate game. Now, crypto as well is in your repertoire.
Yeah,
because obviously
I've been doing that for like the past 4 years. Yeah, because like I said, I teach in the crypto mindset course. I'm just going to start my own thing. I'm not trying to compete with the crypto mindset guys because they're kind of have a different.
They're teaching them about the crypto. You're teaching them the tax side.
I'm teaching the very basic 101 for people that don't know anything about crypto and want to get involved with it. How to do it the right way. How to learn about it. How to get onboarded. Just kind of like the baby steps, and then to get them to the junior high school or the high school level where you pass them off to the crypto mindset guys.
Yeah, to learn crypto and then you handle the tax side. No, I mean, it's a great relationship. But yeah, guys, I mean, if that doesn't tell you guys, that's just the raw numbers. Like, Steve is the real deal, one of the best accountants I've ever worked with. I don't know if you're taking clients on right now, right?
I am.
You are? Okay.
Yeah. I've got a really good team right now that's really trained up. It's funny because, I haven't really told everybody working for me never went to school for accounting, never went to school for tax. They got trained on a job by me personally. And I prefer it that way.
Okay.
I prefer it that way. And I've got long-term tenure, I got one that's over 20 plus years with me.
So you expanded.
So I got a great team, and and they're just trained up really good, and they really make my life, it's a blessing to have them on my team. Yeah.
So guys, again, Steve's Instagram, Seeing Beyond the Numbers.
Hit him up.
He's available.
Yep.
And
DM me and I will get back to you. I promise you. I'm pretty good at that.
You're an entrepreneur. You're starting a side hustle, whatever it may be. You need Steve on your side, guys. It literally saved me probably millions of dollars
Steve,
at this point.
Yeah, it's been just so much fun seeing you guys, like where you guys started and this whole story and how you guys are like it's I'm proud of you guys, man. It's awesome.
Hey, man, we're happy to have you by the side, bro. Guys, and also, if you're like a W-2 employee, it helps you too. When I was a federal agent, you did my taxes.
Yeah.
So, and I was starting my business on the side. So, if you're like a guy that has a regular job and you're doing a side hustle, Steve is also fantastic to have to help you out with that as well. So,
so now we're going to talk about P. Diddy?
Yeah. Don't end up like P. Diddy, guys.
Forget about the taxes now.
Yeah, no, for sure. Guys, so we'll be back with some lovely ladies. Guys, we got a special episode for y'all. I think it's going to be a 20 verse 3 in this case.
Yeah, it's going to be
where are you going to put
myself,
that's good.
Myron, and Chris versus like 15, 20 girls.
Yeah, it's going to be a good time, guys. Switching up for y'all, man. We'll be back here in a little bit. I don't know what time we'll start. It's 8 o'clock right now.
We'll let you guys know.
But we'll
actually,
probably within the hour.
If you're in Telegram, you're going to know right away what time we start.
Because I don't think all the girls are here yet, guys. So, but we love y'all, ninjas. Check out Steve.
Appreciate it, guys.
Seeing Beyond the Numbers on Instagram.
Yep.
We'll be back in a little bit. Peace.
Peace.
I ran so far away.